All right, folks, younger adult diners pinching pennies, and they're cutting back. And, well, some of the luxuries like Chipotle and Shake Shack, those expensive fast food restaurants, just not working out anymore, particularly fresh college grads struggling to find a new job. I want to bring in our FHN Financial chief economist, Chris Lowe. You know, Chris, it's interesting. In one of the interviews CEO for Chipotle gave, he says, through our research, we found that over 90% of Gen Z customers say they would visit a restaurant just for a new sauce. They better break out some new sauces. I mean, but the thing is not the sauce, it's how much it costs at this point, right?
Absolutely. And look, this has been a growing problem for the last couple of years, but it's particularly acute this year. And it, to me, is the collision of two things happening at once. One is the development of AI and the increasing use or reliance on it, which it's doing a lot of the sort of grunt work that analysts used to do, that entry-level service workers used to do. And the other is the fact that, interest rates have been elevated for a year and a half.
Here's the thing, Ed Yardeni was on earlier. We had a spirited, at least I was the spirited part of the discussion. But what I don't understand is two things. The folks who won't acknowledge that labor is a problem, but also this consistent fear about inflation when you still need people have to accept higher prices. Here, obviously, Chipotle, the stock's getting hammered. People, no matter what, they're not going to spend that money. And maybe we circle it back here in New York City. These same young people think that maybe Mamdani can fix this for them. And this is what I'm kind of concerned about is I'm not as concerned about inflation as I am about political upheaval if something doesn't change.
Look, ironically, Jay Powell nailed this when he was asked about it in the press conference yesterday. And what he said was, if you want to improve the lives of people who are just starting out, of people who live paycheck to paycheck, the way to do it is an economy that creates more jobs, because jobs are income. We could use more income growth. If you look at percentiles of income earners, the lowest earners are right now seeing very slow wage growth. So those are the things that could be fixed, that could make a difference.
But it's tough to fix that in the era of AI, isn't it?
It is tough, but look, if we're getting near 4% growth in the economy without job creation, then the answer is obviously the growth speed limit is higher than that, and you need participation by job creators. Who are the job creators? Small business. Small business creates 80% of jobs, but they need low short-term interest rates to expand.
So if you were on the Fed, if you were part of the FOMC, you would have voted for a cut yesterday?
Absolutely, I would, and I'd be supportive of another cut in December.
Ultimately, 5 seconds to go, do we have enough wind in our sails right now as we go into next year, the economy?
Yes, we do, but we need data.
Right.
We need to know what's going on.
Okay.
We got to end that shutdown.
All right, talk to your friend Schumer. Thanks a lot, Chris.